We've got another nice summer day of road construction around here. Hello everybody, Day Trader Next Door here. Today is Wednesday, the 16th of August, and how do I know that without checking my phone? Because it's my anniversary. So needless to say, today is a day off, but we're going to try and go over a few questions and answers. Just a short one today, and I'm hoping to trade the market again tomorrow on Thursday. It'll be pretty much a full week since I traded, but you know, summer's slipping away, and we're really trying to get lots of summer stuff done. We've been out in the boat a lot, done a couple of day trips. On top of that, our oldest got his wisdom teeth out, and he's just starting now to get back to somewhat normal from that. Also, a fellow who worked for me for a number of years unfortunately passed away, and his funeral and all that is coming up, and it's been a really busy week since you saw me last. But here I am. We're going to try and get something done today and hopefully be back for a trading session tomorrow. One thing to get out of the way right away, just a reminder, I just noticed in the comments there's more of those WhatsApp people. I don't have WhatsApp. I don't use WhatsApp. If anybody replies to a comment of yours that says, hey, text me here for amazing investment opportunities, that's not me. I don't give out my cell phone number. I don't have WhatsApp. You can email me, daytradernextdoor@gmail.com. I'll get back to you as soon as reasonably possible, but I don't use WhatsApp. Anytime you see anybody asking to WhatsApp or Telegram, I don't have Telegram either. That's not me, even if it's got my little icon on it. I think most of you guys know better than that, but some people maybe haven't been exposed to that before and they don't realize it. So there's another warning. Reese Tolman, like the boat, wheel bearing shots. I have to mention this, Reese, because you won't believe it, but Sunday we went out again, and we've been out a couple times since. Sunday, another one failed on me at the boat launch, same deal. I've greased them this year. They weren't getting hot, but another one just failed right there. So I was only able to get two. It's a tandem trailer, so there's a total of four. And I was only able to get two whenever my last one went. And I was going to replace the next oldest one, but I didn't, because I thought I better hang on to this in case another one fails, because if I pick the wrong one, then I'm in trouble, right? Sure enough, failed, but it's only 10 minutes from home, so same routine, came home, had dinner, packed all my tools up, went out, changed it, come back. It's almost like routine now. So I've ordered the two more from Amazon. They're coming in on Thursday, and I'm going to get them ready. So surely I don't have to do that again for a little while. Now, as usual, something blew up at home today. It generally happens like that. Any kind of a special day or just any kind of a day off. It's never a shortage of anything to do. So air conditioner was on the fridge today, so I'm just back from the store with parts for that. So that'll be the next mission. But we're just going to park in the driveway and pretend we're not here and answer a few more questions. Question from Anas, mentioning about it's important to have healthy distractions when the market is quiet or while waiting for a setup so you don't get bored. What kind of healthy distractions do you recommend? Well, do you have a hobby that you can do at your desk? Because for me, always number one distraction for me is YouTube. I mean, I always have a window open anyway. Half the time you can see it on my screen when I've been watching last. So I have a window, YouTube open. Sometimes I'll have the CNBC or something like that on, but that's rare. That's what my top monitor's for. But I just find that I don't really watch it. Another thing, I always have a guitar or two sitting right beside my desk because that's what I like to do. I'm a musician, and if it gets slow, I can pick up a guitar, play a couple of tunes, or keep it on my knee while I'm watching the markets. Gives my hands something to do other than click buy and sell and lose money. Another thing, of course, if you got any other productivity work to do, Word documents open, whatever, just have something else. Like you don't want to get distracted from what you're supposed to be doing trading, but you got to have something else that you can go to so that your fingers don't get too itchy that they just have to push buttons. Let them push the keyboard like to type something, not to buy and sell. Speculator 23 mentioned having a written trading plan and rules a few times. Was wondering if you could do a video on it. Yeah, I'm going to do a video on making a trading plan for sure, and what should be in it, what shouldn't be in it, or give you an idea what mine's like. I'm definitely going to do that. RW2, been implementing your advice on getting in and out and moving on with your day, and it's working. Good. I'm glad to hear that. Well done. I hope it's still working. Mark McNair, very helpful to hear your perspective on 2.5 increment levels. Do you feel that holds true for other indexes, like maybe the NQ going in levels of 10? Yes, for sure. The NQ being large and the Dow, same type of thing. I find it's more like the 50s and 100s mostly. Not too much smaller than that, but sometimes 25. but definitely there's psychological numbers there too. It's just because the price is so much greater in size, a similar percentage movement is much bigger as far as numbers and dollars in it. But I definitely find that with the even hundreds and fifties and 25s for sure. MTNJ, a question about my older newsletters. There will be a new newsletter coming out this week, by the way, guys. But is there an archive? There isn't really an archive. Those of you who are on the list will understand that for the most part, it's more current based as far as, what levels do I have in my chart right now? What am I looking for? What's my approach to trading this next few weeks, next month, next whatever? So I don't really have an archive of them. I mean, I do have them saved, but they're probably not all that useful to you now. Just stay tuned to the next ones coming, and they're always adjusted a little bit to current market conditions. Chili Dog has a couple of questions in a row. Be interested in hearing the story of how you started trading, your mentors, and the path to where you are now. Yeah, a number of people have mentioned that, Chili Dog, so that is going to be a video for sure. It'll be fun to make, so that's definitely coming. Another thing he mentions here is, used to trading Forex, being able to change my lot size based upon my stop to stay within risk. Yes, I used to trade Forex too. That's where I started, and with Forex, you could go right down to a micro lot, where you're 10 cents per tick, essentially. So you could trade 1 micro lot, 2, 3, 4, 5, 6, 7, all the way to 10 micros was a mini. 10 minis was a full lot, which is like 100,000 position, right? So you could pick out your trade on a chart, purely on the chart, and then individually tailor your position size right down to the 10 cents per tick, to what it had to be in order to fit your risk parameter of 1%, 2%, whatever. Now, you can, if you're trading a larger account, you can do that with the micro futures if you want, though I wouldn't really recommend doing that anyway, because you pay more commissions on the micro. But if you're just starting with 500 or $1,000 and you're trading a micro for $1.25 a tick, then you don't have that adjustability. If you're looking at a trade and you see a trade that makes sense on the chart, and your stop needs to be around this most recent little low if you're going long, don't just pull your stop up to your 2% risk or whatever it is, because it's going to get hit. Like a 1 or 2 point stop is going to get hit almost always. So, you may as well just not trade. You're going to have to be really picky about what trades you take. Only take trades where you can get your stop around the most recent little support or whatever, the most recent little spot there it has to be when you look at the chart. Only take trades where that and your risk can align, or you have to just widen your risk a little bit in order to take the trade. Now, when you're starting off with a $500 account, you're not in that to make money. You're in that to learn, because the whole idea is you learn with the minimum amount that you can, so that if you get proficient at it, then you can put more money on it, so that whatever number of points you make in a day translate to something that's going to affect your financial well-being, right? So you start with a $500 or $1,000 account, you're using that to learn. You're not using that really to make money, right? So you may have to, don't take any trades. I wouldn't say take any trades where you have to have a 7 or 8 point stop or something big like that. Just don't take those. Take trades where a 3 or 4 point stop makes sense. Where a 5 point stop or a 4 point stop gets you around the level on the chart that you have to be around in order to reasonably take that trade. So it might take you out of, a few trades that you'd like to take. It might kind of disqualify you from those, but that's fine. Just, pick the best ones, pick the ones that where your risk and the physical area on the chart where the stop has to be line up. Tiny Spyro. I'm always busy during the US Open. I'm located in the UK, but trading in the ES. What's your experience with the London Open early session for trading the ES? Is there enough good trades in the first 4 to 6 hours before the US Open? Yes, you definitely can trade that in the London session. It's almost better to a certain extent, in that it's not as wild and it doesn't whip as much. But you look back, just go and look back on the charts and look at the London Open. You'll see that most of the time there's a reasonable enough movement there. If it's ranging, it's a wide enough range a lot of the times that you can trade it, but for the most part, you do see a bit of movement at the London Open. It sometimes becomes a pivot. It sometimes, I don't mean like a pivot, but I mean like it will sometimes turn on there. It will sometimes give you a continuation in the direction that the market was going through Asia. Sometimes it will turn and go back to where it closed from New York. There generally is movement, especially right at the start. But certainly in the first hour or so of the London session, there's enough movement to trade it. Is it ideal? To me, I would rather trade the New York session, but it is doable. You know, it's slower moving. You're probably going to be looking at a smaller target, smaller stop. But yes, you can definitely trade that. I traded the London session for like a couple of years every night or every morning while I was still working full-time at my company, and I traded the indexes. I started with currencies, then I wound up trading the indexes after. That's how I got into the indexes, was by the CFD feed from my Forex broker. It was trickier on that because the spread was way worse, but it was still doable, and I traded the London session. So it's not as, if you can get the time free in the US hours, it's better. There's no denying that, but it certainly is tradable in the London session. Some days not, but a lot of days there's decent movement. And if you see a day that's just flat and it's only moving up and down a couple of points, then just leave that one and come back the next day, try it again. Iro Melodius said he's implementing the one and done. If you get one good trade, call it quits, and it's helping. So glad to hear that. Yes, if you get one good trade, just quit. It works. Believe me, I've been through all different types of things. It works. Not only good for your account, but it's also good for your psychological capital, because you come back the next day feeling encouraged and confident and just plain good. Another question by Reese. It's a good one too. Main thing is he's talking about the break-even point in trading. Approaching that, how it went for me, he finds he's getting to that point now. And he says it seems like it's one of the most difficult points. And yes, it is difficult. However, you've heard me say this a number of times, and hear other people say it too. And it's true. Once you get to break even, when you're at that break even point, you're like 80% of the way to being consistently profitable. It's not halfway there. It's like 80% of the way there. If you can trade day in, day out and not lose money, you pretty much have it made. If you can get to that point, you're probably going to get to the next point, is what I'm saying. A lot of people won't get to the break-even point. They will consistently lose, and then they'll give up. The biggest thing for me when I was at the break-even point was I was encouraged. I felt positive about it because I had had somebody tell me that once you got there, you were most of the way there, and it was true. And really, the big thing there is to just really, really focus. Start being more discerning on what trades you take. It's a lot of the same stuff that I face every day still, and we all do. Be careful with FOMO. Stay out of the FOMO. Try and be a little bit more discriminating on your trades. Make sure you only take the good trades. That's always a battle, but when you try to make everyone count, and you're almost there. So be super careful with your risk. Same thing. And another thing you might not think of so much, but definitely made a difference for me. If you're at the break-even point, you should still be logging all your trades. I don't log all my trades in a logbook anymore, but I did until I was consistently profitable. About 3 years at least of every trade written out in binders. I still have them. And now you have even more options as far as spreadsheets and stuff. Some of you guys have seen the spreadsheets you're making are just fantastic, way better than I ever had. You're going to have a ton of data. Go over the data and reference it to time of day and see if you see any correlations, number one. Number two, reference it to how many trades per day, because you're going to have rules. Maybe if you're break even, you probably do have rules. To get to that point, you probably have rules about how many max trades per day and what time of day you're going to trade and stuff like that, because otherwise, if you don't have those rules, you're probably not at break even yet. Go over and look back on your data and find what hour you trade best in. Bring it down to 1 hour. Just trade that hour going forward and see what happens. Another thing is number of trades per day. Take a look back and see what happens whenever you only take 2 trades a day, when you take 4 trades a day. What happens after a winner, what happens after a loser, etc. And try and figure out what strategy gives you the best expectancy. if you're going to quit after one winner, say like I do, or if you're going to take a maximum of 4 trades a day, maximum of 10 trades a day. If you're taking up to 10 trades a day, see what happens if you cut it off at 5, or you cut it off at 4, or 6, or 3, or something. Start analyzing the metadata a little bit, because if you have a year of that to go back on, you're probably going to find some correlations. Not to say that's going to be the be-all, end-all, but in my experience, what I did was I cut down my trading to 1 hour a day. That's it. That I found on paper, it made my results better. It made me profitable on paper. If I would have just taken the trades from those particular times, I was profitable from being break even. And when I tested it forward in practice, it worked. And I was profitable after that. So that was the best advice I can give as far as what actually worked for me. But just other than the regular things that we all have to fight with all the time, just be super disciplined, be picky on what trades you take, be super careful with your risk, analyze your data, and try and optimize based upon that. And you can't it's not like optimizing a system over and over and over optimizing. I mean, like looking back on 6 months or a year of data, optimizing that, and then forward test it for a while and see if it works. Another question, am I stopping for the day at 3 max losses or 6 trades? Either or, yes. Or 1 good winner, or whenever I get somewhere close to 10 points, or when I don't feel like I want to trade anymore. But definitely, maximum of 6 trades per day, and maximum of 3 full stop outs, but also a maximum of 10-point loss. So if I have a 10-point loss on 2 trades, I'm done. I will quit on the negative side, minus 10 points, that's it. If it's only 1 trade that I have to put a 10-point stop on, and it's the start of the day because it's getting around the open, minus 10, done. I can come back from that easy the next day. And if I get 3 stop outs of any size or break evens, a break even is a loss to me, okay, counts as a loss. So 3 of any combination of stop or break even, I'm out. So if I have 3 break evens, I'm done. If I have 3 stop outs, I'm done. If I have 1 stop out, 2 break evens, I'm done. What that does is it stops me from getting into a downward spiral, and it stops me from doing any more than 10 points damage to my account in 1 day, which is something I can come back from in 1 trade the next day. Capital preservation, no matter how big or small you are as a trader, is the most important thing. Not how much you can make, but not losing money. Because you can't trade if you don't have capital. True owned. Long time watcher, first time question. Well, thanks for asking the question, and thanks for watching. Like your setup using Sierra chart for placing your trade and using TradingView for your charting. Explain what I need to do if I already have data on Sierra. Do I need to buy extra data on TradingView? That depends on what kind of data you have on Sierra. I sort of I didn't really go through it in the video, but I went through this issue myself. If you're getting CQG data, TradingView works with CQG. Okay, so if you have a brokerage account that has a CQG login, then you log into Sierra to TradingView with your CQG login credentials, and you just have to log in and then log out, and it remembers for a month that you have access to live CQG data. In my case, I wound up switching from getting the full data from CQG to getting the data from Sierra, the Denali data feed, because it saved me money. It was cheaper because I was paying for the full CQG and the full Denali, because Sierra changed their packages where you have to pay for the package with Denali even if you don't use it, if you want to use an external feed like CQG. So what I've had to do in order to do that, I pay for the Denali full data from Denali, and I pay through my broker to CQG just for top of book, so that I can still get my data on TradingView. TradingView will not load Denali data. They don't talk to one another. They're CQG integrated. So if you have CQG data that you're using through Sierra chart, it's fine. You just log in with the same credentials to TradingView, and it will figure you out, and it'll realize you have to once a month log in and then log out. And I mean log in with your live trading account credentials once a month, and then it'll remember that you have live data. How do you know when you have to log in? You'll go in and you'll open your charts, and it'll be on delayed data. That just tells you that's expired. You have to go log in once, then log out, and it's there. If you have Denali for your Sierra data, you would have to buy just the top of book for CQG data. And in my case, that's only a couple of bucks, and that's for all the markets. Top of book data is cheap. It's the depth of market that's more expensive. But Lal has a question here. I've sort of half-answered this already for somebody else. Trying to build up my strategy. How many contracts do you usually take per trade, and what's your max drawdown in points that you're willing to take? Max drawdown in points, regardless if I'm trading, one contract or 20, is 10 points. I've been trading 5 contracts primarily for the last year and a half because it's zero stress, and it works well for doing these videos. I was trading 10 before I started making the videos. I've traded a lot more than that before, but it kind of settled into 10 being my happy place. Whenever I started having the camera on me all the time, I thought, okay, I got to do something to take some stress off so this doesn't explode and wind up costing me money. So I took the pressure off to 5 contracts, and I've just stuck with that because it's a real sweet spot for me. I can talk to you guys in the recording and not be too worried about anything. It's totally stress-free trading for me. Now, that size is going to be different for different people. I've been doing this for a while, etc. But you always want to be trading, by the way, the size that it's essentially stress-free, or as stress-free as it can be. You want to be somewhere where if you do get your full stop out for the day, if I lose 10 points in a day, I'm going to be, ticked off at myself for losing money. But the fact that I've lost the 10 points is not going to mean anything. It's not going to be like, oh, now I can't go out for dinner or something. It has to be something like that that's an inconsequential amount to you if you take a full stop out on your day. John Doe, we're watching your videos but still a bit lost. Where would you tell a complete beginner with no experience in trading to begin? Where do I start learning? How many years does it take to get me to be profitable? Okay, well, if everything doesn't quite make sense to you now that you're a complete beginner, well, that's okay. That's normal. So don't worry about that, John. Keep on watching the videos. If you enjoy my videos, keep watching them, and there'll be things that'll start to come. It'll start to make more sense to you. I'm going to start doing some more videos about just how, like the 101 of how things work. What's the DOM and how's that work? That's one that's coming up soon, and just basic stuff. Now, there are a lot of those videos on YouTube anyway that you can go ahead and watch, just basics of the futures market. But there's also a lot of stuff. I don't like to blanket recommend that you go and watch that stuff because, some of it's good and I'm sure and some of it's not. So, but anything you see on my channel is at least going to be legit and hopefully useful for you. So watch that. There's a video I did also about trading book recommendations. If you want to have some books to read, check that out. And as far as how long did it take me to be profitable, like I say, it's a marathon, not a sprint. So in my case, I qualify this. I was technically profitable in year 1, but it wasn't like I just started trading and made money right away. It was like I started trading and lost more than half of it right away off the start. And it took me the rest of the year of treading water up and down to gradually get back up to where I started. And I made money in my second year, but it was a lot of up and downs also. In my third year, I had a good year. I was consistently profitable month to month through the year. And since then, it's been the same, and it's gotten better and more reliable. But I mean, that's still 3 years to get to a point where you're confident really when you come and sit down that you're going to make something happen. So it does take a while, but try those books out. Keep an eye on the channel for some more 101 videos. I do have a playlist I've made up of what's called must-watch trading lessons. One of you guys gave me a request for that, and I think that was a good idea. So I've got that, put that up here somewhere. And you know what? Something I always tell people, take some time and sit down and watch a market trade. You don't need to have futures data or anything. Go on to TradingView and open up a CFD chart of the ES. It would be something like US 500, or the Dow, like the US 30, or the NASDAQ, probably US 100, or something like their Tech 100, whatever. Open up an index chart on that from a Forex feed like through TradingView for free. That's a real-time CFD feed that closely follows the futures price, or the cash price in that case. Watch it and see how it trades. Start drawing lines at places where it stops and turns around. The biggest thing really is just taking your time to learn the price and see how a market moves. So those are a few things you can try anyway. Another question, are there any commodities worth trading at larger buy orders like soybean meal at 10 or 15 contracts. It's been a while since I traded the grains. Crude oil you can definitely trade 10 of, easy. But as far as the grains go, I can't really tell you because I traded soybeans, not the meal, the straight soybeans and corn before. I didn't really have a problem taking 5 contracts in those, but that's the highest I ever got trading them. You know, I traded those earlier on in my trading career because a system that I was trying to make work traded those. And the system didn't make money on those. I eventually abandoned the system and started to make some money on the grains. They're just not that liquid, and I realized that it made a lot more sense to trade the financials because they're so liquid and they move so well. I mean, whatever works for you. If it ain't broke, don't fix it. But as far as scaling up, you really, you want to look at the financials because those are the things that scale so much easier. And crude oil. For sure too, and metals too. The metals you can trade larger sizes in them too. But I just haven't traded the grains enough for recently enough to give a good answer on that. But I'd say just check the volume. This question's probably been answered by now, but when I'm talking about levels like 250, 50, 750, am I talking about the levels like 42, say in price, 42.50? When I talk about the 50s, the 250s, I talk about looking at price in the ES in multiples of $2.50. Whatever the price is, I'm thinking price is either at 4,010 or 4,012.50 or 4,015 or 4,017.50. That's all I'm thinking. I do see that it's not exactly that number, but as far as my thinking, especially when I'm in a trade where price is, I'm thinking of it at either one of those 4 levels all the time in between each round $10 range, right? So that's how I look at it. You hear me talk in the videos about how I determine whether price is 40.12.5 or if it's at 40.15, but I think of it in 2.5 point increments as far as where price is now. And essentially that really just revolves around how did it get there and where's it gone since there. Okay, air conditioner's fixed. Now I gotta go and get my tire fixed. I got a low tire on back there. And it's been like that for a couple of months. I just pump it up every morning, no big deal. Yes, I should have got it fixed by now, but it's just the time, I gotta go sit and wait for an hour for them to do it. Being our anniversary today, we're going away this weekend, finally, for the first time in forever. And the thought just occurred to me that I'm not gonna have my compressor with me at the hotel. And even if I brought a little one with me, my wife really wouldn't like me plugging it in every morning in the hotel room, so I need to get this tire fixed. I saw a headline the other day of some article saying the whole happy wife, happy life thing is outdated. It's not really relevant. Clearly written by somebody who's not married. Question from our friend White Stork. Says he's he's demo trading in the simulator, kind of hoping things are just going to start to click for him, and they're not clicking yet. That's perfectly normal. And I guess the way I trade on the screen, it sort of looks like I'm just kind of going with the flow a lot of the time, which in some cases I am, but for the most part, I'm taking a trade based upon a setup. Someone else asked that, do you have specific setups or do you just kind of go with the flow? I have specific setups, for sure. Now the trade management during the trade and when I get out early and that sort of thing, that is a little bit going with the flow for sure. But it's still based upon rules and experiences and things I find to work. So yes, I do always have a plan and a setup for each trade that I take, 99% of the time. There's a plan ahead of time, there's a specific profit target, ideal profit target, there's a specific stop as far as what happens once the trade gets put on. That kind of goes not tick by tick or point by point, but every 2.5 at a time I essentially reevaluate it. Every 2.5 point, the 2.5, the 5, the 750s, I see how it's progressing, if it's holding at the previous, if it's breaking the next one, etc. And I manage it like that while referencing technicals and some other things. But it's certainly not set it and forget it trading, and that most of the time I don't exit at my full target, and I try and not exit at my full stop either. Now talking about time in the simulator, looking at the screen, it doesn't matter how good a setup you have, you can have the the best setup in the world, but if you can't actually trade it yourself, it's not going to work. So really the biggest part of this is just screen time and experience and observation to see how a market trades. Well, anyway, I guess that's probably about enough for one day. I'm just pulling up to the tire shop here. Let's go in and get these tires fixed so we can get a nice weekend away. Keep your questions and comments coming, guys. There'll be lots more of these. Grab my cheat sheet newsletter at daytradernextdoor.com. Have a fantastic day, and I'll see you again soon.